Let us distinguish between conventional banking and Islamic banking. The first distinction is as to the risk taking. In conventional bank, the risk is transferred from the depositor and the bank to the borrower or entrepreneurs. Whereas in Islamic bank, the risk is shared between the depositors, bank, and the borrowers or entrepreneurs. The second distinction is as to economic versus social focus. Conventional bank concentrates on economic well-being and profit maximization principles, whereas Islamic bank is grounded on ethical, social, and moral framework, promoting entrepreneurship, justness, and fairness. The third distinction is as to fixed income versus profit and loss sharing. In conventional bank or banks, deposits are liability and depositors receive fixed interest. Whereas in Islamic bank, investment account holders are partners of the bank and share in the profit and loss with characteristics of both debts and equity. The fourth distinction is as to deposit guarantee. In conventional banks, all deposits are guaranteed, whereas in Islamic banking or in Islamic banks, deposits placed in current accounts are guaranteed only. Hence, not all deposits are guaranteed, but only deposits placed in current accounts. The fifth distinction is as to the price of money. In conventional banking or conventional bank, it embraces the time value of money concept or principle as in interest, whereas in Islamic banking or Islamic bank, money is not a commodity and it has no price. The sixth distinction is as to the income of the bank. In conventional bank, the fixed interest earned from debt financing is separated from the real economy. Whereas in Islamic bank, the return of the financial transactions arises from the real economy. Seventh distinction is as to the asset link. In conventional banking, transactions can be purely financial with no link to real assets. Whereas in Islamic banking or Islamic banks, all financial transactions need to be linked to real assets. Number 8 distinction is as to the size of banks. In conventional banking, many global conventional banks are of very large size, whereas in Islamic banking, most Islamic banks are small or medium size. Let's have the ninth distinction is as to the bank-client relationship. In conventional banking, the relationship is of creditor and debtor, whereas in Islamic banking, the relationship could be of partners, principal and agent, investor and manager, buyer and seller, lessor and lessee. The 10th distinction is as to the default payment. In conventional banking, default payment is penalized by compounding interest, whereas in Islamic banking, there's no such penalty except cost for recovery of repayments. But if additional penalty charged it needs to be donated to charity. So if additional penalty is to be charged, then it needs to be donated to charity. Then we have the 11th distinction as to the restrictions. In conventional banking, no restrictions on the investments of funds or projects finance, whereas in Islamic banking, only Sharia-compliant investments and projects can be financed. And the last distinction is as to the zakah. In conventional banking or conventional banks do not deal with zakah, whereas in Islamic banking, especially in the modern Islamic banking system, it has become one of the service-oriented functions of the Islamic banks to be a zakah collection center. And also, they pay out their zakah. So those are the distinction between conventional banking and Islamic banking.